All right, good morning, everyone. Let's get going. Okay, U.S. markets managed to put in a decent session again on Friday. I mean, we're just continuing to show the kind of bull market that we're actually in at the moment. We managed to rally under almost any scenario, under most news. Very impressive that we've been able to kind of continue this run that we've had of late. You can see there every sector in the green outside the telecom sector. This came, really despite some, weaker than expected industrial production numbers. And retail numbers as of late have been really weak as well. So now I think the fact that markets continuing to be able to run up is important. Economists have cut their economic forecasts for the first quarter of economic growth from 2.5% down to 2%, with an increase expected in the second quarter to 3%. I was reading some stuff last night, and I think part of the problem is that the weather in the States has been so bad this year that it's not a short-term effect on the economy. It's actually going to be it's actually going to make a sizable difference in the economy. I mean, you've got so much of the area that doesn't normally have that kind of snowfall been getting hit and just totally shuts those cities down, and obviously the economy just grinds to a standstill. So I think we've probably got some more weakness that's going to continue to come in the economic data. Whether or not the market will actually be able to shake it off, I don't know. But bottom line is, I think it's going to continue to plague the market data going forward. All right, if we look into Asia, pretty solid session. Nothing too spectacular there. None of the markets were even up 1%, but everything was up nonetheless. We had in Japan, we did have some disappointing GDP data, and the yen strengthened on the back of that, but the Nikkei managed to kind of hold its own for the day. And then China also had some data out over the weekend that was a little bit better than expected. I think it was new loan growth, and that really kind of supported the Shanghai Composite there. But the one thing that's interesting is that the non-performing loans reached their highest point. So I think that's kind of offsets the new loan growth a little bit. Anyway, out this morning, we've got Group 5 that's coming out sometime today. Has it come out? Huh? Okay. Anyway, I don't have those numbers for you if they've come out, sorry. And then in Japan, we had obviously data we talked about. We had GDP, we had industrial production and capacity utilization. GDP number was a bit soft. Industrial production number was weaker than the prior number. The capacity utilization was better. All right, just to give you guys a glimpse of the week ahead here, you can see that tomorrow we've got bulletins out. Before we even say that, today is a public holiday in the States, so just make sure that you know that. It's President's Day there. Volumes will be lighter, as they always are when the U.S. is closed. So just remember that. All right, and then tomorrow we've got first half numbers out of Bulletin. Then we've got the BOJ monetary policy announcement. On Wednesday we've got Anglo Gold full year numbers. We've got South African CPI, and then we've got the release of the Fed minutes in the States. Thursday we've got Sibanye full year. We've got Truworths half year, Discovery half year, and JD Group half year. Then we've got Walmart in the States, and then we've got the HSBC numbers, PMI numbers out of China, and then we got Northam on Friday. So relatively busy week from that respect. All right, let's get into the maps. Okay, we're going to keep it somewhat short here just to excuse me, keep from showing you guys too much of the same thing. Kind of feels like we're going over a lot of the same charts, a lot of the same stocks still in play. What in the world is that? Okay, there we go. Okay, the first trend here, I'm just going to show this one. Several of the banks, we continue to sit here in this looks like a bear flag position coming up to test resistance. This is an important day, I think, for FirstRand for a couple of reasons. One, it's pushing up against its 200-day, which it had dropped below. We're bear flagging up into this level at 32, and it's at resistance. So I think you can see there very clear cut that that stock needs to get above the kind of 31.90 to 32 level. Otherwise, it's really going to struggle to, it'll probably most likely is going to pull back if it can't get above there. Actually, let me show you the first thing we're going to show you. Let me take a step back here. First thing I'd like to show you is actually the Rand, and I think this is really important. We finally got a punch through of the 111 level, which is right here. You can see we finally punched through we finally punched through the 11 level, and we did so convincingly. Now we've broke through to about 1085. If you look here, we're probably looking to come in to some sort of support or resistance, whichever side you're looking at it on, around 1065, 1070, and I think that's important because breaking through 11, the weakness in the Rand has obviously started to lend huge support to the mining space. It's been hugely negative to the retail space or to any other interest rate sensitive stock. I think what we may end up seeing in the short term is a bit of a bounce out of some of the interest rate sensitive stocks because the Rand's been able to climb through this 11 level. I think the real some sort of a portion of those sell-offs in the retail sector and the interest rate sensitive sectors could have been potentially because they're worried that the one interest rate hike wasn't going to do it. They're going to have to stay on the path, and then obviously really get punished on the back of it. So the fact that we're breaking through 11, as we go higher, that's going to be more and more bullish, obviously, for the interest rate sensitive sectors. Keep that in mind on your day-to-day moves. Also, conversely, should be less bullish for the mining space. So you may see a day or two here of profit taking in the mining space, and maybe some reallocation into interest rate sensitive stocks. On the back of that, we saw Anglo's going back in the same sort of thing. Anglo's failing on Friday, and if we have zoomed forward here, sorry for the I can't give you a 2-day because it's over the weekend, but we almost made a key reversal on Friday. In fact, we were in key reversal territory there at one point on Friday, but we managed to close up about $1.50 off the lows. But you can see that we punched to a new high of the recent trend, which is coming from all the way down here around 210, 215. Sorry about that. You can see, so we made a new high on the day, intraday, and then we reversed below the previous day's lows, which would have given us a key reversal had we closed there. We didn't close there, so we can only really call this a reversal. But I think it's really important because this is the second day in a row that we had something like that happen. The previous day we had Rio Tinto, which made a reversal also on really good numbers. This is Anglo's, made a reversal on really good numbers. So I think to an extent a lot of that's priced in. We got Billy's numbers tomorrow. We'll have a look at Billy's here real quickly as well. Billy's, it might not be a bad idea to even have a look at, potentially risk reward. Seems like the way that Rio and Anglo's have traded, even with great numbers, that shorting Billy's today might not be the worst idea. If the others can't get up on good numbers, I don't know if Billy's will be able to get up either. So you can see there we're at the very top end of a channel, upward sloping channel. We've been in Billiton's as well. So just keep that in mind. I'll show here MTN as well. MTN, I think we've got to be careful out there, boys, for the guys that are long. And the reason why is because we've really dropped trend support here. And if we zoom in a little bit more closely, you can see here that we kind of dropped out the bottom of this little support on Friday. I'll try to. There we go. On Thursday, sorry, and then Friday we regained it on what should have been incredibly positive news with the interconnection rates being delayed, and then obviously you've got the possibility that maybe they back off of them to an extent, or you never know what's going to end up happening there now. So it should have been really bullish news, and the selling was just so big, managed to push it right back down to kind of below support. So if these things can't get off the ground here today, then I think it's time to be wary of MTN. The last one I'm going to show actually is Woolworths, and the reason why I wanted to show Woolworths, I'm I'm not even going to bother trying to put the volume charts on here, volume bars on here. It's going to take too long. I thought I had on here already. We did kind of get above kind of the same sort of level, the bottom end of that range that we're talking about. But what was so important about Willys on Friday, even though you can't see it on the chart, is that we managed to spend the whole day grinding higher for the most part on huge volume. We traded 12.7 million shares, the biggest volume I can ever remember seeing in Woolies, and we finished the day up about 2% That's huge volume price, indication that at that price, I think somebody's happy to put their foot down and going to push it higher, and that comes the day after earnings that were relatively solid. And that's it for today, guys. Thanks a lot.